Hey there, traders. Todd here of tradinganalysis.com. This is going to be your free video update for Thursday, July 16th. And we took a short today in Wynn Resorts. It's a stock we've been watching. It's been weak, and we got the signal today. So to start, we're looking at a 3-hour here, and this is the low point, right around $93 and about $93, $94 down there, 94 whatever, right there. And we have set up Fibonacci retracements against all major swing waves to form a zone of resistance, and it held that zone. The way you do that basically is you find the one low point for shorts, and then you look back above this swing. Once we got the rejection down, you're like, okay, you want to find everything, every blue dot that is higher within the most recent trend. So you're going to do a retracement off of that blue dot, which is the first major swing. That one is the next major swing, and finally up here. So you do a retracement off the high blue dot to the low, the middle one to the low, and the lower one to the low. You don't use these guys because this correction went above those two prior major swings. So you're using all major swings that are higher than the end of your correction. So all of these fib retracements come from those three swings that we just showed you. So we double tested this twice and began to move down, right? So we took a short today. What did we do? We did small, just a half to start. I did a 110, 105 call spread. Reason we sold calls is with an 87% implied volatility rank. IV is very high right now, so calls are expensive. And there's been a lot of volatility in the stock and in the sector, so better to be short premium up there. Plus, we have earnings on the 29th. We did it in weeklies with 9 days to go. So we're going to be out of this trade before earnings on the 29th. All right, so over to the 1 hour. Let me show you what we did there. So that's that zone of resistance. And the signal was nice. We had a 3-wave swing, blue dot, blue dot, blue dot. Then we started to get the move down. Okay, so when you get a 3-wave move into fib resistance that we outlined over on the 3-hour chart, subsequent failure, you're like, okay, now we can start looking for downside. So once we got the move down, we did the 110. We sold 105, bought the 110 calls, looking for this resistance to hold and to start to move lower. So how far down would you go? Well, basically what you do is you take a retracement and you measure the distance of this correction. You're going to book partial profits at the 786, which is 97.58. You're going to look for another partial down at 1272, and at that point, your credit spread would most likely be worthless, so you don't have to worry about too much. But if you're just trading the short or doing a debit spread, you'd really crank down on stops once you get to the 1272, which is part of our trade setup. All right, and then you look for deeper extensions. All right, so that's set up and win. We also made a move on gold today, and we did book max profits on a put debit spread in gold today that expire in July. We just laid them right back out there because I think gold is on the brink of a collapse, and I think as soon as we get some kind of concrete evidence, and today the Silver Fox, Janet Yellen, she made a pretty good indication that things are on track for a rate hike, and if we break down, gold, I think, is in trouble. It's about 110 in GLD. And then over to the gold futures, the breakdown is about 1140, okay? And this actually, I don't have it drawn on this chart, but we have trendline support that goes way back to like 2002 in gold, and it's going to break right around the 1130 to 1140 area. So this is a major, major break. What we did in gold, I don't want to get too out over my skis here. This is the daily. So we basically did in the GLD, we did let me just show you that trade. We did a 109, 108 put spread. So we bought an out of the money put debit spread. I think we paid about 30 cents for it, 34 cents for it. So we bought the 109s and bought the 109s, sold the 108s. And again, the reason we did the short 108 as our short strike is back over that gold chart. We do have Fibonacci support zone right around 1120 to 1125, and the equivalent in the GLD ETF is about 108. So I think there's going to be a drop here. This is a huge break in gold, so I don't think it's just going to cruise through sub 1,000 on the first time. I think it's going to go bounce back, retest this trend line that we have drawn over here on the weekly, then go. So you got to trade a little bit. Can't get too aggressive. Just buy out of the money puts and just expect the gold to go to 800. It's going to have to work. So that's what we're doing there in gold. So that's why we did the 109, 108 put spread in GLD. All right, guys, so that'll do it for us today. If you don't mind and this video helped, please hit the like button. It helps us rise up in the competitive world of YouTube. If you have a question, comment, please put it down there. I love knowing what you guys think. Anything, questions, comments, compliments, insults, jokes, tell me what you had for dinner, anything you want. That'd be great. So, guys, thanks, and we'll catch you on the next video.